What makes you so certain that tariff-related price increases will be a one-time effect? I don't think we've seen you since the Supreme Court tariff decision, and it's pretty clear that none of us know what the extent of the tariff shock will be as the administration moves to replace some of the tariffs that were overturned. So I suppose I'm curious, what would make you question this certainty that tariffs are going to be a one-time price effect?
Well, I would not at all use the word certain about my views on that. I'm not certain. I'm uncertain.
And that's why the markets are doing what they're doing. So yesterday we had the Federal Reserve come out and they didn't do anything. Well, that was expected. And then stocks crumbled. Mortgage rates jumped, and we're also seeing mortgage rates jump again this morning. So what I want to do is I want to talk to you guys about what's happening today in mortgage rates. Because if you're watching this video, hopefully you're a homeowner, home buyer, realtor, maybe even a loan officer trying to figure out, okay, the Federal Reserve didn't cut yesterday, but mortgage rates went up yesterday, and they look like they're going to go up once again today. So what's going on? So the biggest thing I want to talk about today is uncertainty. We have uncertainty in the Middle East. We have uncertainty with the jobs report numbers. We have uncertainty with inflation. But it's finally nice to hear from the Federal Reserve saying we're really uncertain. So I want to go back to this. I call this the Moneyball number or Moneyball question of the day. This is a question I wish I could have asked. So let's get back to Federal Chairman Powell. He's going to actually explain kind of how inflation works and how tariffs should be a one-off. It's much different than true inflation. And then also he talks about oil, how this oil jump might be short-lived as well. So let's get back to Federal Chairman Powell. Then I'm going to show you market reactions. Actually, what happened with mortgage rates yesterday wasn't good news. And that bad news looks like it's going to continue today as well. So let's get back to Federal Chairman Powell to see how he answers this question. And I wish I could have asked it.
But just if you think about what it is, it's a one-time increase in the price of a good, right? And what inflation is, ongoing increases in prices this year, next year, the year after. That's what inflation is. It's not a one-time price increase. There's a very, very big difference. The public doesn't really focus on that, but that's the difference. And tariffs should be in theory, unless they cause people to start expecting still more tariffs the next year and still more tariffs the next year. They should be a classic one-time thing. People say the same thing traditionally about an energy price spike, because traditionally prices go up and they come back down. And by the time monetary policy would react, it would be over. So
that's why they didn't cut yesterday. They're like, okay, inflation, yeah, it's higher, and we think it's higher because of tariffs, and then it's going to get even higher because of oil. But he's saying tariffs are a one-off. And same thing with oil. So what's going to happen when all this settles? Well, let's try to figure that out. First thing I want to let you know is, why do we follow the Fed? Well, they were created for two reasons. One was price stability, aka inflation, to try to keep inflation in line. How they do it is they control interest rates. Okay, that's number one. Number two, their mandate is maximum employment. So they want to keep the unemployment rate below 5%. So we got news, actually this morning, if we go to the economic calendar, on the jobs numbers. So here's what we're going to look at: two things. We're going to look at how many people got let go. Okay, so that's not good news. But were they able to be absorbed back into the market? We're going to look at continued claims. Because if you got let go and got a job the next day, okay, that's a net neutral. It might have hiccuped your life a little bit. But let's get over to what these numbers look like. So if we go through here, we had initial jobless claims come in this morning. Last reading was 213. It was supposed to increase to 215. It dropped to 205. So less people got let go. So let's go down to continued claims, or up to continued claims, and it's 1.84 million previously. It was supposed to be at 1.85, came in at 1.85. Okay, so this came in a little bit better. And then if you go up through yesterday's inflation numbers, this is where I thought, okay, this is bad. You have inflation, the PPI, producer inflation. Last reading was 0.5, it went to 0.7. Well, could this be tariffs? Okay, so that's what the federal chairman's saying. But the question here is uncertainty. Is it? Is it going to go away? How long is it going to last? Now you have the Middle East problem, and you have oil over. Well, let's talk about that for a second. Let's get over to the stock market. I'm going to get to the bond market in a minute on where mortgage rates are going to go. But here's what I just want to teach you: a mainstream media a tactic they're using. Okay, so let's look here. Oil briefly hits $119. And European gas prices surge. Well, every day we talk about this oil price right through here. If you look at it, it's $96 a barrel. Okay, so now what mainstream media is doing, they're going over to Brent. Okay, yeah, that's oil, but we don't track this. If you're watching oil, please just watch oil. Actually, it just petered down just a little bit. So it's at $96 a barrel. Let's get over to the markets, see how they're faring for the day. Is it open yet? No, markets are not open yet. It's not looking like a good day so far here. We've got the Dow Jones down 300 points. Brent oil jumps, and that's what's causing the havoc. But as we look at the Federal Reserve Chairman, okay, tariffs, they're in here. We know they were deemed illegal, but they got kind of put back into place. So we kind of know those are there. Now we have this oil shock, and over the next couple readings for the inflation numbers, it's going to be high because oil did reach $100 and some a barrel recently. So inflationary numbers coming down the pike are going to be high. So now what do you do? Okay, so now let me give you my thoughts on this. So let's scroll back to where we were before, let's say a couple months ago. Federal Chairman Powell kept coming in saying we were in the right direction. We had inflation coming down. They did. Inflation was 8% 3 years ago. Now it's at 3%. Okay, that's a pretty big move. They just can't get it down to 2%. Well, they were on their way down, and then oil happened and all these other things. So right through here, when you got the inflation numbers, this is what the Federal Reserve watches. It's at 3% or higher. And then you got the jobs market that's good. It's under 5%. That's full employment. Then you have GDP. Well, in his speech yesterday, Federal Chairman Powell said the GDP for this year is going to be 2.4. Okay, so good GDP, an unemployment rate that we've seen for the last 2 years being pretty steady, and then inflation that's at 3%, but he's saying, okay, tariffs are a one-off and oil's a one-off. So if you look at all this, where should we be? Okay, so let me give you kind of my forecast. If we go over to here, the Federal Reserve, they're meeting in 41 days. Let's just look at this for kicks. There's a 93% chance. What's they going to do? Let's go to probabilities and see where this is. There's a 93% chance they're not going to do anything. Okay, so it's still, wow, it's not looking like, here's where the markets are kind of getting hit. Now they're saying there's no rate cuts this year because this oil thing could push us into Q2, Q3, Q4, and that could raise havoc. And so now they're saying there is basically a 90% all the way down to next year of no rate cuts this year. So now you're going to see rates start to move. Okay, so what do you do if you're a homeowner or you're looking to buy? Okay, so if you're a homeowner right now, hopefully you use our tools. Let me show you a tool I have for you. If you're a homeowner, put your mortgage information up there, please. RateWatch 2.1. Here's what I want you to do. Put in your mortgage information. Let me know two things. What rate you want to be contacted to see if it saves you some money. So let's say you're at 7%. You're like, Dan, when it hits 6, call me, text me, email me. Let's go over the numbers. See if it makes sense to refinance. That's what we'll do. We don't sell the data. What 2.1 does is now you can say, okay, Dan, I want to save $300 a month, $400 a month. Put it in there. When it hits that, I'll call you, text you, email you as well. And if you're a home buyer, what do you do? Reach out to us. We'd love to help you. Here's what I do, and then I'll give you my forecast. Should you lock? Should you float? What should you do? Okay, so my name is Dan Frio. I'm a licensed mortgage loan officer in all 50 states as well as Puerto Rico. So if you're anywhere in the country, I'd love to help you. I've been doing this for over 35 years. Here's the cool thing. I work at a bank. This bank provides me licensing in all 50 states. But they're also set up with over almost 40 other lenders. What they did is they came to us and said, what do you need to be more productive? I'm like, I'm the rate update. I need more rates and products. I'm like, okay. So now we're set up with almost 40 different lenders. So instead of you going out there and putting in your application there, that credit union, that bankrate.com, lending tree, having all your mortgage data sold, credit pulled, and then once you get quotes, you don't really know what's going on anyways. Reach out to us. We'd love to help you. So we're going to do all that for you. We're going to scan almost 40 different lenders to see what kind of rates can we get you? So join me today. I'll have a live event. I'll post that right up through here. I'm going to do this at the last minute to show you behind the scenes exactly how we do this. So what should you do if you're looking at these rates right now? If you're a homeowner, home buyer, or you're looking to build? Well, here's what I'm expecting. I don't know if I'd be locking in at these levels. I think we're basically at the high end of what we're going to be. Yes, it can tick up a little bit more today, and I'll show you the charts here in a second. But if you're looking to buy or build down the road, I would get pre-approved. Use a rate at 6.5%, just to be careful. Okay, when you get pre-qualified, ask them, put in 6.5%, or reach out to us. We'll get you pre-qualified. And here's the reason why we do that. If you can get qualified at 6.5%, rates might get there, and you qualify, you're good. Because I'm thinking this is the high end of rates. So if rates come back down to 6.25%, you realize they were 5.99 about 2-3 weeks ago. You missed it. Well, if you're a homeowner, don't miss it again. with our tools right through here. So the bond market today, let's get back to it. The bond market that we follow each day right through here, it is down 19 ticks. This is not good news, but the good news is it was down over 30 points earlier. So how you'd read this thing, if that number up there is red, that's bad news. That means mortgage rates are going up. The bigger the number, the bigger the adjustment. This adjustment will probably put us right in the range of about 6.4 today. My forecast for this quarter was 5.875 to 6.25. Yeah, we're over that. I might have to change those projections. But like Federal Chairman Powell said, I'm really unsure how long this conflict's going to last, how long these tariffs inflation is going to last, and when things can turn on a dime. President Trump said the other day, when this war ends, oil prices are going to drop like a rock. That's what I'm expecting. So once oil prices start to drop, you're going to see all these things follow suit. But until then, follow oil, follow the Iranian conflict. That's going to tell you exactly where the markets are taking us from there. So folks, my name is Dan Frio. If you need any help with this, getting a mortgage, home equity loans, or even a reverse mortgage, I'd love to help you. But join me on my live events each week that I hold. I think you're going to learn a lot something. But subscribe over there. You realize I have over 7,500 videos out there. Something out there. There's got to be something that you can learn. And our whole goal here is to help you understand what's going on with these and help homeowners basically go from application to keys in their pocket, or for homeowners to basically get their keys, their mortgage statement, reach out to us and drop those payments. So thanks for watching, folks. Don't forget to subscribe. I'll be back here later today on our live event. But have a great day. Be safe. And I'll see you next time. Bye-bye.